Hi, Happy New Year to all. I hope that you have a great holiday season. So, welcome to this week, first edition 2021 weekly technical outlook on the major stock indices, where I'll be covering the technical configuration, trend biasness, as well as key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 indices. So, before we start, let's take a look at the disclaimer slides first. Okay, so let me jump on to our CMC trading platform. So the first chart that I'll flash to share with you all will be one of my chart that I will always tend to start when I will to gauge whether the market is actually on a risk on or a risk off behavior. Is this iShares Philadelphia Semiconductor ETF? Why semiconductor? Because as we know that semiconductor is actually the driver of global growth. If the trend of this semiconductor ETF is inching upwards, no signs of exhaustion, so it means that global growth is pretty intact, which translate to the risk on behavior is still much intact as well. So as we could see over here, since 8th of December, after hitting its all-time high at 37.95 slash 38 383, pardon me, it started to consolidate in the sideways configuration. While consolidating the sideways configuration, it does not show any signs of a bearish exhaustion price pattern, like we talk about double top or inverse head and shoulder. And momentum indicator correspondingly is pretty much positive as well. This is the RSI oscillator. As you could see, the RSI oscillator continuing to hold above this corresponding support at the 57 level in place since 10th of November. Recently, in the last 1 week, it started to bounce off from this support. Haven't hit the extreme overbought level yet. So as we could see that this previous consolidation is actually caused by the RSI hitting an extreme overbought level. Thus, it work off this extreme overbought level, bounce off from the support, which means that momentum in the medium term has starts to return again. And price pattern wise, in terms of the consolidation that we start to see since 8th of December, in fact, it's actually in a motion of doing this potential bullish pendant configuration, which is a bullish price action configuration, which means, i.e., there's a high probability that as long as 353.70 holds, this semiconductor ETF may stage a bullish breakout above 383 to target the next resistance at 39.90, pardon me, 395.90 and 405.80. Overall, still a risk-on environment, okay, for stocks. Now, let's move on to the SPX 500 index. So this is in fact the daily chart. So what we could see over here is that since the bullish break of this very long-term major expanding wedge resistance that is in place since 20th September 2018, it did a bullish breakout on the 1st of December. Ever since then, it managed to hover around it. Did a test on the 21st of December, pullback resistance, resistance turns pullback support at 36.40, and now started to inch higher towards the close of last year. So all in all, what we could see is that there is still pretty much positive on the SPX. Its corresponding RSI still bullish, positive as well, holding above this corresponding support at the 57 level. No clear sign of a kind of a extreme overbought condition yet that is supporting potential price action to move higher. Okay, now let's go on to the strategy chart, which is the 4-hour chart, as we could see from here. So on the 4-hour chart, what we have over here is that it's now pretty much approaching to our previous first target at 37.70. Okay, so what I'm going to do over here is that I will tighten the key medium term pivotal support to 36.40. So as long as 36.40 holds, potentially we could see SPX 500 to actually hit higher for a next target at 38.80. All right, so now let's move on to the higher beta tech heavy Nasdaq 100 index. Okay, so as we could see that this Nasdaq 100 index over here is pretty much in a positive configuration as well, since the bullish breakout on 26th of November from this symmetrical triangle price configuration, inching upwards, now hitting our first target, which is at 12970 slash 13180. So the strategy for this week pretty much similar to the SPX 500. I will tidy up the key medium-term pivotal support to this 12,100. So as long as this 12,100 holds, I'm expecting it to hit much higher above 13,180 to actually target the next resistance at 13,350. Okay, so however, if we start to see a kind of a 4-hour close below 12,100, then we will kind of invalidate this bullish scenario to see a kind of a choppy price action to move down back towards the lower boundary of its range at support at this 10,960. Okay, so one interesting chart or an important chart that I want to share will be on the Asia, which is Hong Kong 50. Okay, it's actually a Hang Seng index over at City Index, CMC, pardon me. We call it Hong Kong 50. So what's interesting about this Hong Kong 50 is that today it actually did a bullish breakout from a very key resistance, which is at 27,400. Okay, what is this 27,400? Is a Fibonacci projection, as well as it corresponds to a long-term circular descending trend line from its January all-time high. And previous recovery did not actually surpass this descending trendline resistance, with the exception of today. Okay, momentum is also pretty strong as well. In RSI inching higher above the 50 level mark, doesn't hit an extreme overbought level yet, which actually telling us that the longer term momentum remains intact on the Hong Kong 50 index. So now let's go on to the strategy chart for this week. If you recall that before the year ends of 2020 year ends, we actually have a neutral strategy. So since right now it has already clearly break above 27,400, we actually turn bullish right now to validate a further push up as it starts to inch higher within this medium term ascending channel that is in place since 25th of September 2020 low. So right now over here is that one thing to actually consider is we may see a bit of slight pullback to actually test this level over here, which is this former range or former swing high area of 25th of November and 27th of November, acting as a pullback support at this 27,050. Also, given that the shorter term RSI, which is the 4-hour RSI, is actually now at a kind of an extreme overbought condition. So, remain bullish on minor pullbacks as long as this key medium term pivotal support holds for this week, which is at 26,680. We do expect a further potential push up to actually target the next resistance at 28,500, followed by 28,770 slash 29,090, which is a Fibo projection extension level, as well as the upper boundary of this medium term ascending channel. All right, so now let's take a look at the next index. Asia index will be the Nikkei 225. Over in CMC, we call it the Japan 225 index. So as we could recall that the Nikkei 225 or the Japan 225 index actually had a very strong up move during the last quarter of last year, Q4 2020, and in fact during the last week of December, it actually hit a 30-year high. So potentially, can it still go higher, or is it just a fake rally where everything is kind of game over for the Japan 225 to do a bearish kind of a retracement? So before we could answer that, let's take a look at the longer term chart first. If you look at the longer term chart, momentum wise is still positive. I could see this RSI, monthly RSIs broke above this corresponding major descending resistance that was in place since June 2015. Mind you, it's actually a 4-year kind of a resistance, 4-year plus resistance. Hasn't hit an extreme overbought level yet in terms of monthly RSI, which actually indicates to us that in the longer term, that means we're talking about 3 months to 6 months, it still has a higher potential to go much higher from here. So if you look through the weekly Okay, this will be the weekly chart. So weekly chart, what we could see over here, it started to kind of involve within this major ascending channel that is in place since 16th of March 2020 low. All right, so everything is still pretty positive on the weekly chart as well. Now, go on to the strategy chart for this week. So what we could see is that at the start of the new year in 2021, we see the Nikkei 225, pardon me, the Japan 225 actually kind of after this very strong push up in the last week of December 2020, it tends to see a bit of profit taking. And what interestingly is that it actually, yes, today it actually went down to close to about 1.10, 1.1% or so. But what interesting is that over here is that the actually there's some potential buying interest or bullish pressure start coming in at right above 26935. So what is 26935? 26935 is a relatively important minor support, because if you look at the previously, it was actually a range resistance that was actually in place since 27th of November, got taken out last in the on 29th of December, which was last week, and right now finding support right above this level again to be actually telling us relatively this so off early of the day seen today has kind of a starting we started to see pretty much potential deep buyers coming back supporting this Japan 225. Similar for the RSI as well. The 4-hour RSI actually holding above the 50 level, as well as this former resistance now turns into a pullback support. So all in all, as long as this 26,215 medium-term pivotal support holds, we do expect the Japan 225 to shape another potential upleg to target the next resistance at 28,410, followed by 29,440, which is defined by a confluence of this Fibo extension cluster level, as well as the upper boundary of this ascending channel, the major ascending channel that is in place since March 2020 low. All right. So now moving on to the German 30 index. So over at German 30 index, what I want to highlight to you all is the monthly chart first. So as we could see that late last week, this German 30 index, the last week of December, it actually managed to kind of a stage a bullish breakout from this close to 2 years plus of range resistance that is in shape or in place since Jan 2018 at this 13,600 level. RSI, monthly RSI also did a similar bullish breakout. From here, as we could see, still had pretty much room to run into the overbought level, the extreme, the overbought zone, and as well as the extreme overbought level, which indicate to us that the long-term bullish impulsive up move potentially has still much more leg to go much higher. So as we could see, right, let me share with you all. Okay, oops. Okay, we could see potentially target the top of this ascending channel, okay, at 15,020, followed by 16,850 in a longer term perspective. So that's we're talking about 3 to 6 months. So how about for this coming week, the strategy? So with that, let's take a look at the daily chart. So we could see the daily chart it actually broke above this kind of a descending resistance level that was in place formally since 20th Feb high, now turns into a pullback support at close to 13,050, which is also the swing low of 21st of December last year and 10th of December. Nothing pretty scary on the RSI oscillator, the daily RSI oscillator, still hovering above the 50 level mark, hasn't hit the extreme overbought level yet, which indicate to us that medium term upside momentum still has potentially more room to run upwards. Okay, so on the pivotal support for this week, we go to the 4-hour chart. So as we could see on the 4-hour chart, since the 30th of October 2020 low, it actually started to evolve in a kind of ascending this ascending channel configuration, with the median line of the channel previously acting as a resistance, now coming to a resistance at 14,315. So as long as this 13,050 medium term pivotal support holds, we do expect the German 30 index to shape another up leg this week, potentially to target 14,315. Above 14,315, we may start to see the next upside target or next resistance at 14,620 slash 14,730. But however, if we start to see a 4-hour close below 13,050, that will actually invalidate this bullish scenario for a kind of a very messy corrective down move again to target 13,325. So why 13,325 is actually the 61%. Okay, let me draw the Fibo for you all. Okay, from here we take to the last swing high. It's actually closed. It's actually the 61.8 Fibonacci retracement of this ongoing entire up move since 30th of October 2020 low. Okay, so with that, that's pretty much sum up for the weekly technical outlook for this week. So I do wish you all a great trading week ahead, and I see you all next in my next video.